Oh, check, check, check. I think we are good. Oh, look at you, dude. Morning, brother.
Morning, bro.
Oh, you are quick on it this morning. I was like, huh, I wonder who's at. Anyways, happy Valentine's Day, man.
Yeah, you too,
We got to make some money to get the lady something. Well, we'll
dude.
think
Right,
about
dude.
it. Nah. All right, so I'm just gonna jump in. I know we had a pretty big day. We got a lot of stuff going on in terms of the markets and where we are. So before we get started, just got to note. Wow, look at that jumping around. Options are not for everyone. We're going to go through some options trading stuff, and you should call 1-888 options and get a copy of characteristics and risks of standardized options before you start trading. Cool. So moving in, I just did a quick copy paste of a bunch of headlines that I saw. Really, I think the biggest thing to note this week, at least on my radar, is the Russia-Ukraine situation. Man, my voice is just so bad right now.
I
Hopefully,
thought it
it
was
gets
getting better.
better. I don't know. It's up and down,
Yeah.
in and out, in and out. Who knows? So that said, I think that we'll go through some of that. I was watching a buddy do his stream this morning. He's pointing out bacon's up 24% year over year. That's his biggest disappointment. So I thought that was funny. Um, and I think really this CPI is what really got the market kind of caught, um, really just put it in a tiff last week. And then towards the end of the week, the Russia Ukraine situation, of course. But CPI is consumer price index, obviously, inflation rates essentially across the board. The Fed watches CPI as one of their main uh, gauges of the market. That said, CPI, what they look at is they look at core. And if you're not familiar with what these numbers are and how to read them, what to do with them, why they matter, consumer price inflation year over year, 7.5%. So higher than expected. So remember, nothing. What doesn't move markets is numbers that come in as expected. The only thing that actually does move a market is a surprise, right? So so a little bit slightly to the upside, which I don't know how big of a surprise that actually is. I think been looking at the markets, if you've been trading for a little while, I think it's pretty clear that the markets are screaming for a rate hike. Actually, I think we just need to get that, rip the band-aid off, is what you'll hear a lot, and just start going through it, right? So we may have a little pullback, so have some cash here and there, but I think overall, they're going to be buying opportunities, at least in the medium term. That said, so core, what's funny about this is core versus standard. Core does not include things like food, gas, heating, those kind of things. So what's weird is like that's like our biggest expense, and unfortunately, they don't include that in their gauge, one of their gauges at least. So what's been going on in terms of talks, right? So we have a lot of Fed generals, presidents speaking this week, and we'll go through that. We had Bullard this morning on CNBC talking about a full basis point, so 100 BPS basis points, and you can go through and look at who's expecting what. I think it's right now it's anywhere between 4 to almost 7, and the last read I got is if we're going to get there, really, this next hike, which isn't now, this next hike needs to be more like half a point or 50 basis points. So I think that's what we're looking for. At the same time, the Fed's been talking about fixing the balance sheet, right? And that's, are we adding, are we still buying bonds? And well, we haven't started tapering on the bond purchases. We're still buying. So as long as we're in that funky situation, we're gonna be in that like uncertainty, and the market hates uncertainty. So until bond purchases stop and rates actually start going up, then we're not gonna have a whole lot of certainty in the market, and we might have a little chop in front of us. The other thing, the 210 yield curve, essentially, you might think that if interest rates go up, then financials will go up also. But I'll say, like, it's not, it doesn't actually work exactly that way. So the 2-year yield is going up faster than the 10-year yield. And what that'll do to financials is that they're not going to be so inclined to loan longer term things. So we would see things affect like housing, even car sales, things like that. Any of your longer term purchases, there's like 30-year loan, you're not going to see a whole lot of that going on. At least not a like the financials aren't going to benefit from that. You might want to run out and go buy a house before rates go up, but that's a different story altogether. That said, the shorter term yields, they will be going higher, but again, the banks don't really make a whole lot on that. I mean, they do, but not nearly as much. So they're not gonna loan out large amounts. So stocks rebound overly hawkish view. So hawkish meaning we do want rates, right? So that's the market is screaming we want a rate hike, and we want to get some certainty really into the markets. And as long as we have this uncertainty, it's going to be choppy. I got a little space in there. So again, this situation, Russian escalation, I think coming into this morning, futures were pretty red. And the second that there was a headline that, okay, well, nothing really crazy is going to happen, they almost like immediately flip green, and we'll probably see a little pullback as people are like, well, do I believe that or not? It's more that uncertainty. And I think there was a general said they sent a lot of blood to the border, which was probably the most concerning headline. And the supply will last about 42 days. So if they're going to anticipate some kind of attacks, yeah, it would be likely, based on this, like in the next 30 to 40 days. So that said, it's having an impact on the markets, no doubt, and it's definitely something that we need to be on the lookout for. So Russian invasion headlines, inflation headlines, rate interest hikes, bond tapering, all those kind of things. That's what we need to be listening for, really. So moving on into the market earnings. So we still have a good chunk of earnings to go through this week and for the rest of the month. So we will be going through some of those. We will have some of our IVES trades if you guys are familiar with that. Make sure everything's working. Yep, cool. There is one. We had a couple more. We had Amgen, Disney, and Coke all reported last week, all beat expectations, and this is our view right now. So I didn't update this. Of the Dow 30 components, we have 25 that have reported. 21 out of those 25 have actually beat. And this week we have Cisco and we have Walmart, I think, in the back half. So definitely some stuff to look forward to this week. I think just the general choppy tone of the market, I would say, likely going to be very snipey this week. So look for some support, resistance levels, sell at resistance, and buy at support. It might be a good week to do some range-bound neutral trades as well. So the biggest, I did not update this. I'm sorry, guys. So the biggest, this is not updated, but we do have two things, Tuesday and Wednesday. Those are going to be our biggest economic data points of the week. Don't pay attention to this. I will just go ahead and move into them. We had, again, Fed Bullard speech this morning, and we did have some consumer inflation expectations come out earlier today. Let me just check if I have that data, which I don't think I actually did earlier. It came in at 5.8. So consumer inflation's so the expectations came in at 5.8 today as the actual expectation. So that would go right here. Not a lot of earnings on Mondays, by the way. So Tuesday, Wednesday, Thursday, these are our bigger earnings days. So tomorrow we get something called PPI. So I think that will actually be a pretty important data point for us. So we'll look at core PPI. So remember CPI is consumer price inflation. PPI is producer price inflation. So if if the producers are catching, wow, I'm skipping around, sorry guys. If the producers are catching inflation, well, what are they going to, are they just going to eat that? No, they pass it down to the consumers. So if we see this number, either the core, either one of these month over month, year over year numbers, the expectation here is 7.9. I think anything that in the last report was 8.3. So the expectation or consensus is that PPI is going to come down, and that tells us that really the market is actually thinking we're actually peak inflation. So try to call a bottom, look for a bottom, pick your spots. Those are the kind of things. Typically, when we have a bottom that settles in, we will see chop for a little while as it establishes itself. And so my guess is that this week, assuming that we don't have any crazy invasion things, that will be more of a black swan event that we need to be aware of. But this is the number I'm going to be watching very closely. I think if we come in, if we're expecting 7.9 and we come in, I don't know, like 7.6, 7.5, that would probably be really bullish for stocks as an immediate reaction to this number. Anything over 8.3 though is going to be bearish and will signal to the market that it's likely not the end of peak. We're not at peak inflation. So this, I believe, is going to be a very big number to watch. So producer price index, core, year over year, this is the number, the big number for me, what I'm going to be looking at. So keep it on your calendars. That's tomorrow morning. So Wednesday, and oh, by the way, I live in the West Coast, so all these times that you're looking at are West Coast times, so adjust for your time zone. So yeah, it's 5:30 in the morning my time when these numbers come out. 8:30 East Coast. Wednesday, we have a couple different things that happen. So retail sales, typically, when we didn't have the pandemic, retail sales actually did move markets. They don't really move markets anymore, at least not in this environment, mostly because we know that there's major supply chain issues. I don't know how accurate these are. And so the market doesn't really expect them to be, a big deal. And even if they come in great, it's like, well, what's the supply chain going to be like next month? So keep it on the radar, but I wouldn't put too much stock in this kind of number right now. Industrial production is a good number right now. So this is actually, we know production is going to be low. So capacity is actually what I would be looking at. This is more towards that service sector. And again, it's industrial capacity utilization. We are having, I think it was like steel shortages, a lot of supply chain stuff still. So actually, that might be a theme to look at this. Maybe some steel stocks. I like that. And anything over 75 is actually pretty decent. But this would be labor, supply chain, all that kind of stuff comes into capacity utilization for the month of January. So these are a little behind, but it's just that gauge, right? If we were 76.5 and we're expecting to be a little bit higher, we'll see. I don't know if we're going to come in higher, but something to look at. Housing prices, again, I would expect that this likely goes up just because if people are going to be really, if we know rates are going higher, well, you'd probably go buy your house sooner than later. That said, the biggest, I believe, market moving event is going to come in on Wednesday. Again, West Coast time zone, so 11 a.m. my time, probably, I don't know, 2 p.m. your time if you're on the East Coast. FOMC minutes. So the minutes are just the notes. It's not going to be a meeting, but they're going to release the notes from the last FOMC meeting. It's not new data, but it is important data and seriously changes a lot of market sentiment. So people will be looking for, God, I keep moving this around. Sorry, guys. Wednesday. So Tuesday, PPI. Wednesday, FOMC minutes, mid-market. This is probably going to be one of the bigger issues. So maybe we come in probably decent. I don't even know where we're trading right now. Into Wednesday. And then as we get closer to this Wednesday afternoon session, I would expect some serious volatility to jump up and show itself in the markets for sure. We can go back. We looked last week. Last week we looked at 440 as the low, targeting low end for the week. We tagged it almost to a T. I think it was like 439. Yeah. So that level is still in play today, actually. So Thursday, again, building permits, housing starts. We'll see. There was initial jobless claims. Again, hasn't really been moving a ton of markets. They actually went down last month. And that's what they're looking for, more of the same this month. And then this is where, so we have the FOMC minutes, and this is where you can see this kind of cool, I mean, it's not cool, but funny kind of situation. So we would start Monday. We have Fed Buller speech, right? Tuesday, we get a little reprieve, but we also have PPI coming out, Producer Price Index, which we know that the market's watching. Wednesday, we have the FOMC minutes of the prior FOMC meeting get released, and the market will react to that. And then all of a sudden we start to see, okay, again, another Fed president speech, Buller speech. This is, as I look at this, I'm like, okay, the Fed is starting to posture. They're knowing that maybe whatever comes out in the minutes might rock a market. And so they're going to have a messaging kind of campaign. And then Friday, we have 1, 2, 3 more Fed president speeches. And what are they going to say? I don't know. But whatever happens on the FOMC day, what I can say is that without fail, it's like the first reaction to whatever happens is typically a quick fake out. And then there's a longer move after that first move intraday that is tradable. And then the very next day or the following 2 or 3 days, that second move has almost been 100% reversed and then some. So if we do get a big sell-off or if we get a big sell-off, I would see that at the end of Wednesday, maybe a potential buying opportunity. If it's a big pop at the end of Wednesday, I would see that as a potential selling opportunity. So just to note, look, there are multiple Fed speeches coming out in quick succession right after FOMC minutes. So there's some kind of posturing happening from the Fed's messaging campaign. Just something to note. Thursday, we do have our next iteration or next webinar for option sellers. I think now this is more more appropriate actually to go over some of this, how to trade the chop option strategies. These are more neutral strategies. Definitely something that you're going to want in a market like this that's starting to consolidate and pick a direction. So I think that is it. From here, I will just go into the market. Look at that. So last week, I didn't touch these charts at all. What I'll do, this is very bright. Let me just change this real quick. Hopefully that's a little bit less bright. Is it? No, not really. Whatever. Okay, so blue, I have pre-market. Red or yellow is, yellow is pre-market, blue is post-market. And so last week, I haven't touched this. Last week we had non-farm payroll right here. And this created a point of interest, a technical level. This fundamental event created this technical level, 440, right there. Tagged it to a T. We were looking for a bounce somewhere in this kind of green zone right here. Ooh, that we're in if we did go lower. These orange bars, so I don't need this. I do think that this 440 level here will stay in play as a technical level. And again, we're very choppy, but we are below it right now. These orange lines right here are the prior week's high and low. Purple lines were the prior month's high and low. So right now I have it updated, these orange lines. So these high and low was from 2 weeks ago. So now I'm going to change this, just go to a quick weekly chart. And when I say high and low, it's just this prior week, prior week candle. And that's it. Let me snag this. There it is, right? So, wow, we had a big, look at that. That's a big giant range. 440, 458 to 430, 430, almost 439. And right now, we are clean below, looking at that level, but we're not fully below, if that makes sense. So this pivot is 438.94. This is going to be our major pivot. So at this point, I think we're looking at a potential lower week. This orange box here, again, this is an average week's range. I would assume, so this 440 level stays in play. If you get a chance to probably short somewhere around that level, I would absolutely be looking for that to play as some kind of resistance. And right now we know, hey, look, 439, 438.94, 439. This is a small $1. What is this? 443. What do you have? What's your level for the NFP? 443.50. Okay, there you go. So 443.50, I would say, will likely play a pretty big role. This is fundamental event creating a technical level. Yeah, 444, 443, somewhere around there. If we get this little bounce between now, Wednesday, I would actually be looking to either sell some upside calls, more likely than not to do that. I think VIX is pretty high right now, and target a downside, again, this average weekly range at about 430, actually. And a stretch downside would be the prior month low of 420. That's a very big stretch. That would be like, hey, look, yeah, bombs are going off kind of situation to me. So that said, I think we are good. I do want to, I'll mark, what day did we say? Somewhere in here, we're going to have FOMC minutes, and that will likely also, this fundamental event will likely also create a technical level wherever it happens to be. 430 is what I'm looking at. Well, yeah, this lines up perfectly with this prior kind of chop zone. I'm going to take a volume profile tool real quick, and this tags 432.22 for the consolidation level of this prior area. This was a 1, 2, 3, 4, 5-day consolidation right around 432. I like that. That's just, I'm just going to put this here as a marker. Do I need a color? Nah, not a big deal. So that's what I would see for this week. Looking to sell probably around 435, 430, 444-ish level. We'll see. Maybe we get a little bounce, and then likely get some chop. If we get a clean day above that level, well, then we're going higher, and that's clear. Yeah, if we get clean day above 430, 444, we should be going straight back to 455-ish based on these levels.
Yeah, that's exactly what I have too.
So again, we don't want to come into the market with a predetermined notion of what's going to happen, right? That's the thing. We don't know what's going to happen. We have two areas of interest, right? 438, I'm sorry, yeah, 439 and 444. So in between those two levels, it's not that tradable, but you know, what are we going to look for as we approach those two levels? We know very much what we're going to be looking for. If it's either up here, we want to look for some kind of bounce and rejection. Oops, we actually might see a breakthrough and then a quick push back down, and then maybe we'll see a rejection, or we might see a breakthrough, push back down, and a bounce up. Either one of those two scenarios are very possible, but we want to be aware. Hey, look, I don't know. I don't have a magic ball what's going to happen, but we want to have an idea of what we're going to do when those levels approach. Also to the downside, okay, 432. If I like, we could get something like this, right? We have a pre-market low, 435, basically, which I think 435. Yeah, that would be a nice strike to probably target if we do head lower on the week towards 430 in my mind. So that's SPY for the week. I think Q is very similar, so I'm just going to run through these. One thing I want to note before I jump into the rest of the indexes, two things. Let's take a look at the VIX, right? So the VIX is our gauge as option traders, like how expensive, inexpensive are some of the options, primarily those in the S&P 500. We were looking at prior you know, tendencies of the VIX and how does it trade. It trades just like this, exactly the way it is trading right now. Nothing new to us, very much expected. So you get these kind of like big push, push, pull back, push, right? And we knew that this is very possible, right? That could go, actually, it could very well, like very possibly go higher. We don't know, but we want to, oh my God, but we want to be aware for sure. Did this happen? Does this happen in the past? Yes, it does. That's what it looks like right here. So that's why I would say, hey, look, right now we got levels 35, 30, 20. Those are typical levels in the VIX. When we're trading above those, you want to know, hey, look, if you're below 20, I think, you could think about doing some swing trades. If you're above 25, expect some chop. If you're above, if you're above 30 or 35, yeah, some funky's happening, and you don't really, you got to be careful. Even if you're buying calls, because it's the market sold off so much, you got to know, look, everything's overpriced, and even if I get my move at that point, I may not actually make any money. So be very, very aware. There are different ways to trade options. Buying them isn't always the best way to do it. Right now, it looks like we're probably going to head up a little bit more, and we'll probably pull back to about 25, give or take, which would coincide with that guess of heading back on the SPY to 444. So there you have it. That said, though, here you go. So bonds, I think, are probably one of the most important ones. So last week, again, we had this orange box, the average price of an average week. We had NFP right here, release. We had a data point that actually shows right there. This is our, what is this? 138. So this is 20-year Treasury bonds in general, not the yield, the value of the paper bonds themselves. It's an inverse correlation. So if the yield goes up, the bond goes down. If the yield goes down, the bond goes up. We know yield is going up. So it's a pretty straightforward trade right now. At least, that's what I would say, expect. And so we should have actually played this 138 level on the bond market as a resistance point because, again, fundamental event, NFP, comes out and we create a technical level right here. So if we do get another push towards that 138 and this orange box, we know, hey, this is an average weekly range for the yield for the bond. Yeah, play to the downside to 133. Not a bad, wow. Where was that trade this morning? This was all pre-market moving. Yeah, these things move pre-market. So if we get a bounce, again, with the VIX over 25, closer to 30, even on something like this, probably selling some upside, 140, 145 call credit spreads, best trade that you can get. On the downside, maybe throw in some 130, 125 full put spreads, and expect this kind of range to trade in. Other than that, because we have that potential black market type situation, it might be good also to be that snipey trader for sure. So crude oil, again, I'm not going to the index just yet. Crude oil created a level 92. We've been talking about $100 barrel oil forever, and yeah, as overbought as this looks, I mean, it's still, look, it's going, and we're above this level right here. So yeah, I think we're doing it. One thing, so the situation in Ukraine and what have you, that absolutely has, you would have seen, hey, this morning's kind of pushed down here. That was, it's all about energy. It's all about oil prices. And I think in Russia, like, we're doing a ton of natural gas exporting over to Europe. I think their natural gas price, I don't remember what it's measured in. Anyways, it's like 10 times the price of ours. And energy over there is insanely expensive compared to what our prices are. So that's what is fueling a lot of the moves. So I would assume that that trade becomes pretty volatile sooner or later. What was that situation? I just put on my charts and an indicator setup. So anyways, let's go ahead and move into the actual indexes that we care about. Again, oil was also inflationary movement. So non-farm payroll here, right, created this level. Actually was, I'm going to take these white bars down. We're coming up on this 350 right now. And so the Qs might actually give us the first signal of what's going to happen. I'm going to change these. So again, orange bars, the prior week high and low. I have not touched these charts at all. So we need to adjust them really quick. And I'm going to go ahead and do that. Just taking this, tagging top, bottom. Now we got an inside week forming. That's good for volatility in terms of taking volatility in on the Qs. Qs volatility does not correlate to the VIX as much. There's a little correlation, but nothing crazy. And this non-farm payroll data point, I do want to take a quick lock on right there. Oh, look at that. We're about to take, that might be, I hate to say it, folks. That might be a good level to short, but we're going to look. When we test, can we break through, or do we push lower? So again, orange boxes, average range for a week. Stocks don't go, really, they don't move more than their average range, typically. So give this like 80% probability that they'll stay within. So that said, if this is the high of the week, 351 on the Qs, this purple line, prior month low, yeah, I would expect something if we do reject, right? Maybe something like this week. We'll see how it plays out. We might get that full move in a day or 2 days. And then if that happens, again, right, let's say this happens, expect this chop and expect it to kind of stay in this box. So if you get to your targets, just take it down. And yeah, I would think that we should be a little snipey this week. That's my gut. So let's go back. So what did I say that was? That was on the Qs. All right, 351 likely resistance. Fundamental event creating technical level. This orange box, average weekly range. Look, same thing. If it goes above that level, can I expect an upside move to 365? Yeah, I can, but not before that. So right now, it's not a bullish bias. I don't have a bearish bias. We're in between this kind of chop level, same thing. So we're neutral right now, and that's how you want to be. Don't come in with that predetermined expectation of what's going to happen. You'll get slapped every time. Non-farm payroll number here, right? 348. This is the diamonds, Dow Industrials. So as long as we're below that, I would say, look, we can have this move. Well, we got a lot of room on the downside on this one. I'm going to readjust our weekly levels one more time to take this over right here and right. Oh, look at that big old candle. Yeah, so just look at this. Like your view all of a sudden, when you zoom out, changes quite a bit, doesn't it? Like my lines, this 200 day, this is 200 day. This is actually locked on the daily, right? It's not on the chart. It's locked on the daily. So we're below the 200. Yeah, trending down right now. But again, this white line will be that technical level created by a fundamental event that's definitely important to pay attention to. So look at this. We tagged it in pre-market, 348. So as we might chop around there, low end on the week, 339. If we can trade above that, let's say high end on the week, since we opened here, right? 355. So those are your two targets right now. These orange lines, this prior week low, will also act as a level of resistance too. So look, we might get that lower high, lower low, and we might just continue on to the downside. Very possible. Mid caps, Russell, here we go. Same situation. I'm going to go ahead and change this weekly line right here. So we're going through the indexes, right, just to give you guys like baseline. Here's the plan, right? How bullish, how bearish do I want to be? Do I want to be neutral? If I'm trading stocks in these indexes, this is kind of your gauge. So we got, let me pull it back to the 30. All right, so where's my NFP? Ooh, we're way down here. 195 on the low end. So here we're actually above, different view, right? So why would this be a different view? Does it make sense? Yeah, it does. So this is a different type of stock, right? This is your mid-cap stock. The other ones are your mega cap, stocks, your Boeings, your like your Microsofts, things like that. These guys are going to be more impacted by some of the economic data. So employment rates, things like that. Peak inflation. If it is peak inflation, that would be the best for a sector like this, if that makes sense. So as long as we're above this NFP mark right here, and as long as we're really above this level that we're running into, we are running into it real hard right now. Let's see. Is this, geez, look at this big old fallout. This actually, I would be okay being a little bit more bullish on, based on what I'm looking at, just from a technical perspective. So we're above this non-farm payroll pivot. We're getting an inside day right now, and tomorrow, really, could I see this trading up to 209 this week? Yeah, I think so. Let me see, where's that? Where's my box? Yeah. So if I'm going to use a 30-minute today. It doesn't really, these levels are all the same based on any time frame you're looking at. So if we opened here, an average week's range, again, that's what this orange box is. This could take us above last week's high of 209 up to like 212. What do I have? And then this 215 is another NFP like market fundamental level created, like fundamental events creating technical levels. This was prior month NFP level that we start chopping around and failed at in January. So again, this is going to be your major resistance up here. And as long as we're in between this range, yeah, I kind of like this. Yeah, I'd really like it if we were clearly moving higher, but right now we're not. So this is almost neutral. I want to start seeing higher highs. Right now it's still struggling, but the Russell doesn't typically trade with the diamonds, the Qs, or SPY, so it kind of does its own thing. So that will, that all makes sense, really. We take a look at Bitcoin before we jump in really quick. So Bitcoin, again, we knew we were looking at this 42 level for sure to act as some serious resistance, and it did, and it is right now. So super important level to watch on Bitcoin for the bulls. Again, crypto bull for sure, not necessarily a Bitcoin bull by any means. We had dynamic support coming in right here and dynamic resistance right there, creating what will be a broadening range, was creating a broadening range here. So expect volatility. That's what I can tell you. These orange bars, week before last, low and high, 41.65, acting as support beautifully, heading back up to 45. We'll see. Below 41.65, I'm not comfortable shorting, or I'm not comfortable shorting this until it's below that. And right now, it's acting as support, so I'm actually happy with that. In terms of like continuing to move up. Did I adjust these? Yeah, I did. Oh yeah. And so where does that put us? So purple lines prior month, high and low. Well, for now, we can just go one bar to the next. So 44 would be resistance. Definitely 45,800 major resistance. So call it 45. Nice round like mental number. Gonna be definite resistance, and we have this pivot from the last. I don't know why FOMC is affecting crypto, but it is. We have this pivot that we're running into actually as we speak. So just careful out there. I would pick my spots around 41,650. Be very cautious of being a bull in crypto land. If Bitcoin takes a dump, yeah, your altcoins, your Solanas, AVAX, whatever you're trading, is going to be higher beta, so it's going to dump further, faster, harder than Bitcoin. Or if Bitcoin goes up, they're going to fly further, faster, harder than Bitcoin itself. So be aware, be cautious. I think that's what I got. So that's the good sector check initially. Then we go into like subsectors, right? So that's the routine that you want to have as a trader. I have my ranges for the major indices. Now I want to look at subsectors and sectors inside those indices and see what do I want to trade this week, right? So oil's been on a really good move for a very long time. We're actually right above January's high now. So do I think, and we're talking $100 barrel oil. This is OIH, oil services sector. We're talking about Schlumberger, Halliburton, things like that. I think this continues to be good, and we're pulling back, settling on a pretty important, very important pivot level, I believe. I might want to double check my lines here just to be sure. Is that? Yes, it is. So prior month high is right there. Oops. I'm going to tag that. Pull it. Prior month high, prior month low. That orange line, prior week high, prior week low, just that candle. Look at that. Boom, boom. Are we settling above the prior month? Yeah, we are. So, wow. So this is a good trade. It's looking like a good trade. I'd rather see like a few hours above this line right now. And then I'd like to see it above 240 to take it to the upside around 245. That's the sector. Now, if you want to get specific to stocks, yeah, take a look at those Schlumberger, Halliburton type stocks. On the flip side, if it does break below this 238 level as a sector, be aware. So, and you could also actually go into the sector itself and look at those specific stocks, see how they're trading compared to the sector. You might be surprised at some of what you see by doing that. Retail, I don't have any expectations for retail. I think that the whole sector kind of trades sideways right now. We do have some retail numbers coming out. The other one, energy, right? So we talked about energy being really, really, expensive outside of the U.S. And is that good for U.S. energy companies? Well, if you're exporting, sure, like nat gas, things like that. I know that this trade has been pretty good for a while, looking very similar. So purple lines, prior month. This is a month candle. Prior month high, prior month low, right there. Week, orange lines, prior week high, prior week low. We're right in there. So can energy pull back a little bit to the 67 before it starts to take off? Yeah, you betcha. But check this chart out, right? It's got room, both of them. Actually, oil more so than energy, no question. Man, this is just a good trade. Like, could you imagine? Even if you picked it up, you're like 50% in September. Yeah, it's not bad. So we talked about rates going up, and we talked about like maybe the 10-year, the effect on they call long bonds versus short bonds, and how that affects the rates and the financials. So again, long bonds not really going up. It is technically in an uptrend. This is again this 200-day moving average, prior month range. You're just right smack in the middle. So for now, do we expect to chop probably around this 200-day and prior week? Yeah, I would just. This is going to be a range bound trade for sure. This would be like iron condors. I don't have any clear direction. Not yet. Definitely not. So that would be your JP Morgan, Morgan Stanley's, BlackRock, things like that. Not super clear. So consumer staples, interesting chart. Why would staples do good? Really, like, I don't know. Like, what would be the bull case for staples? That it's not technology. Or can't really be, one way or the other on this. I think if you're going to be looking for a safe play, yeah, you're tagging some of the support 75, and you're just trading up to call it, yeah, look at 74. These are baby moves, 75 to 76.80. What's in your staples like Procter & Gamble, Colgate, Clorox, that kind of stuff? That would be your staples. Healthcare, This does not look great. Healthcare, low employment participation. Healthcare is not really going to be doing super well. Big companies aren't paying that much for your healthcare. Ooh, look at that, 200-day broke clean below prior week low. This is primarily your UNH, so toughy. No dice. I own some UNH, so maybe I'll trim it, or maybe I'll cut it. We'll see. I mean, it's a little late now. You're clean below. So here, if we do get a pushback up to 130 on this sector, and it starts to fail, that's when you can look to short some of those healthcare type names. That's XLV. You want to look at anything else? Semis. Yeah, so it's SMH. Yeah, everybody's staple. Semis actually getting a nice little bounce today. Again, this red line, 200-day moving average. I'm just adjusting for prior week candles. And inside week so far, nothing crazy to write home about. Can you trade some of these type ranges? Oh yeah, very tradable. Very tradable. Look at that tag. Prior month low, 249 on the semi index. Monthly bars pretty low. Well, we're consolidating. What is this? What is this white line? Oh, it's NFP. All right, so again, non-farm payroll, I believe, last week. I believe so. Creating technical level. I'm going to assume so. Yeah. Right there. So, 270 resistance. Same thing, chop zone. You're in the chop zone. So, chop zone, you could trade neutral strategies or you could be a sniper. One of the two. But you don't want to be swinging a whole lot. I think that's it for the sectors that I would look at. So I would say, again, oil services, more bullish, looking for this bounce off support. Energy, I like this space right now. Right off that support, think like Devon. Devon's my go-to, but there's a lot. XLB, I didn't look at. Does this actually, I was thinking steel, right? And inflation, so inflation goes up, then materials should do better. Let's see. You're kind of like chopping. So this sector's probably getting, whipped around. Yeah, maybe their assets are going up, but probably supply chain issues. Can't sell as much even though their prices are higher. Maybe people aren't buying as much. So that actually might be a little bit range bound. But this range, 82 to 87, tradable right now. This was my day trading chart. What do you want to do? You got anything you want to look at, Steve? I do.
I was looking at Tesla for bounce off of like 850, but that already played out.
Yep, I saw that this morning. I think is there something, it's getting close to, what's it at this morning? Oh yeah, 890, so 900, 890, right? We got a level for sure. So let me get this out. So we will, let me adjust my lines one more time. So I do this with all the charts, that's just me right now. You guys have your own trading systems, that's fine. I trade candlesticks and I start high, work it down, right, to the weekly, daily, hourly, 1530, 1535, and just go through it like that, right? Daily pivots, simple. Look at this. Friday pivot midday, right at what? 885. So this was a big pivot, and I believe this actually traced back quite, yeah. So we had a pivot, 885, big time level. Yesterday, Friday, and coincides with the 4th, the 3rd. Yeah, this recent pivot level. So right now we're above it. We just flashed down below, tagged the prior week low, which was Friday, right? And bounced up through this level. So we're about to decide. Look at this. Yeah, all the way back to October with the original breakout. I think that goes back pretty far now. Yeah, This goes way back. Look at that. January 2021. So this is critical level. So what are we looking for, right? So we've cleared this resistance level. It's kind of like your typical, what we're seeing a lot right now, like I say typical, manipulation down. If you're below 885, we're trading to the downside to 850, right? And at the stretch low, 790. Nothing really below that. But right here, right now, we're extended, pulling back, and is this looking like a potential setup for a viable bounce to where to what to prior week high 950, right? 945. I think so. If we get the bounce, and no, we don't have it yet. So we're looking for this 882-ish level. First target 911. That would probably be the contract you're going to be looking to set on 900. And then extended level 950. That looks good. I was looking, what was it this morning? Rivian. Same thing, similar thing.
Mm-hmm.
So Rivian was super extended on the downside, right? Super extended. Let me just hit this monthly. Like it's been so long. Rivian. Cool, so that's synced. So daily. This is consolidation range right here. So if you're right off this 56, could you trade up to prior day high? Yeah, for sure. Your target acquired at this point. So yeah, I couldn't take a new trade on this till it was clear above 69. Call it 70. You're gonna run into some resistance, and then to 75, which is that next level of resistance. So either around 56 for a bounce, or a breakthrough 70 and retrace, bounce back up off that same 70 level potential. Can we take a look at AMD? I saw AMD this morning.
That was the next one I mentioned.
Yeah, so I took a quick trade. Man, those contracts, morning trading, so tough. I was like, I'm going to get stuck in a stupid trade right now. And I'm trying to prep for this. Oh, shit. So inside day, for sure. What is important right now? So we have resistance 118. So how am I getting 118? I'll show you really quick. That was this, or this, prior low, which we broke clean below, kind of bounced 111, which traces back here, similar to Tesla. So right now, oops, I might be getting a little buffering issue. Right now, if we start trading above 119, I think this is clean to trade to 125, 130, probably 125 on a day trade. I like that. Did you have a level here? Something similar? Or like rejection? Could get rejected.
Yeah, I was also kind of looking at, what is this, 122.50-ish?
Yep.
As a, just a real quick target to the upside. But yeah, I was looking at 118 as well. I was able to get like 10% out of that this morning, but
it's tough, scalpy.
yeah.
Yeah, so he's targeting this level right here, which was the consolidation level. So for sure, it could either, same thing, inside here, this might be a little chop zone. But for me, like if it's clear, you can get that couple dollar move real fast on an option contract. That's pretty profitable. Otherwise, I might be looking for either a rejection here, back down to 112. That would be like 115 contract put. Below that, danger zone. Danger zone below that. I don't know that I want to look at that. But hey, it's possible. Very possible. But again, inside day, what does that tell us? It's inside week, inside day. It tells us that volatility is actually pretty low. We don't have volatility events in front of us like a earnings or anything like that. That's done and gone, I believe. Is it? I believe so. Let's see.
Yes, for AMD, yes.
Yeah. So, put your...
Yeah, what was that last week?
Yeah, something like that. Yeah, IB's coming in, so he's getting sucked up. Not so bad. I want to take a look. What's the other staple? Amazon. Nvidia, I'm assuming would be the same. Amazon. Ooh, I didn't look at Amazon today until just now. This first look. Amazon weekly. Amazon. Wow, what a bar. What a monthly bar. That's crazy. So, another inside month. Technically, and we're running into, why do I have this level? 3161. 3165. I have resistance at 3165. 1, 2, 3. Yeah, this kind of chop zone. And interesting. Interesting, we're running up against it. So potential short or potential long. But again, at that pivot, that's pivot, like it has a tendency to pivot directions and make a strong move somewhere around these levels. So looking for that. They act as like little magnets too, clearly. So prior week low, is that accurate? Yep, so that was prior week low. We just bounced off of it. That's what that was. Pretty hard. 350. Straight back to that resistance level. Not tradable here. Would have been tradable this morning. Missed that. Definitely missed that. I think we're good. I don't know. Do you have something else that you wanted to take a look at? We're about at the hour.
Two things.
Yeah.
One more of a technical perspective. In Apple, I have 168 as a fairly decent pivot point from previous lows back in December, and then again in January. It looks like we're holding 168 fairly well. But again, yeah, still need a little bit more confirmation on that.
Yeah. 169, I have prior week low. 168 if you're retracing. Yeah, nice. So, and then I got a what is 172 significance? I don't know.
That looks to me like from last week.
Yeah, maybe. So, bouncing up here. This is an hourly chart. Yeah, if we get above 169, could you trade the few dollars? Yeah, I think so.
Yeah, again,
it's very tradable.
Pretty scalpy sniper situation with that, just because of all the different pivot points that we have in between those levels. Lockheed Martin, from a fundamental perspective, given what's going on,
you got the pullback.
Prime interests. They have significant interest abroad with their weapons technologies that they distribute in that area. So I think, we saw a big pop on Lockheed Martin on Friday with the news coming out. I think either way, this could be a buy the rumor, sell the news type situation for them, because it's already pretty much priced in, I think, at this point. And then even more downside if they end up saying that it's not going to happen, which is what the Ukraine president, Prime Minister, I forget which one it is, but they're saying that we're quite a ways away from that happening at this point. So kind of mixed messages typically from the news outlets. So I think if that ends up not happening, we see a pretty quick move to the downside as well, just from a fundamental perspective.
Yeah, actually, I like that a lot. So just quick levels, right? So 353 prior month low, 384 prior week low, and today we're about to test it.
Yeah.
So yeah, clean below, break, retest, fail, down to 350. Yeah, I don't know how liquid the options are, but at least from a sheriff's perspective, that's not a bad trade. Definitely not. Cool. I think we're good.
I think that was pretty much all that I had.
I like it. All right, man. No requests on stream. All right, cool. Well, I'll see you in there. And that's it for this week, guys. Adios.